Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Monday, December 14th, 2020. And our top stories today, a new cryptocurrency index is set to make its debut in 2021, and what business leaders should know about cryptocurrency. Well, joining me now to discuss this and a lot more is Kevin Kelly. He's co-founder of Delphi Digital, a cryptocurrency research firm. Kevin, great to see you. Thanks for joining us on the program this morning.
Thanks for having me, Jeff.
So let's jump in because I think we've got some really interesting developments and great news, I think, in terms of benchmarking these cryptocurrencies. S&P Dow Jones Indices recently announced that they're going to establish an index of over 500 cryptos. I want to get your feedback on this.
Yeah, so it's, I think, just another sign of kind of the maturation of the crypto and digital asset space, as you and I have been talking about for a long time. When you think about your more kind of professional or institutional investors coming into this market, one of the things that I wouldn't say has necessarily been a huge deterrent so far, but certainly has been, a key consideration is how do you benchmark against this space, right? A lot of people look at Bitcoin and say Bitcoin's kind of the beta version of the crypto market because it is the largest crypto asset. It's the most renowned. But again, there's such a diversity across these different assets and the different kind of subsectors within the digital asset space that have been evolving, that I think eventually, this is the first step in many steps. It gets us closer to, again, the maturation of this space in which you would expect. Let's take the S&P 500, for example, in the traditional equity markets. You have financials, you have tech, you have industrials, you have these different subsectors within a broader kind of equity market. With crypto, I think we're going to have something similar where first you start off with these kind of high level, big picture indices that somebody like S&P Dow Jones coming in obviously gives a lot of credibility and credence to this space. And then eventually those will kind of branch off into subsector indices as well. Because if you think about the amount of money potentially long term and selfishly that's involved in the indexing space, and you think about the move to passive investing and people wanting to get exposure to digital assets, but maybe don't want to manage that diversification exposure themselves, or diversified exposure themselves, this is where, potentially some of the products that get benchmarked to these indices really start to come in. And again, selfishly long term, there's certainly going to be, at least in our opinion, a lot of money there.
Yeah, and this offers transparency. I think you made that point earlier, right? I mean, I think the goal of an index really is to provide some level of transparency. I think obviously S&P, I think, said that in their announcement, but this actually provides a window, if you will, into how these cryptocurrencies function. There's obviously due diligence that has to be done on the part of an index provider to establish this. So I would say that overall, to your point about maturation, it just further shows the maturation by the fact that you're able to open this up and get more transparency.
Yeah, and it's a great point, because one of the transparency arguments too has been, even reference pricing that will underline some of these indices, right? Or even if you're looking at reference pricing when you're trying to evaluate Bitcoin, right? And there's a lot of kind of nuance to creating these different indices that track different crypto assets. But long story short, by them partnering with this company called Luca that's in digital crypto data provider, they're going to be basically using their reference pricing to help kind of solve some of those issues. So to your point, yes, there's more transparency. The idea is that they're going to be basically trying to aggregate a lot of this kind of fragmented trading activity that's happening with the crypto space, create these more transparent indices so that people can actually track and benchmark against what's happening in the crypto digital asset space much better or more efficiently than they are today.
And Kevin, the indexes in general may oftentimes be used as basis for things like exchange traded funds or index mutual funds. Are we closer? I think last time we had chatted, or maybe one of the times we chatted, there were definitely some regulatory hurdles to establishing a cryptocurrency exchange traded fund. Are we any closer? Does this kind of signal, hey, now you can buy an ETF maybe in the future to get exposure to crypto, digital assets?
Yeah, I think you hit the nail on the head. I think at this point, it's much more a question of when rather than if, right? Eventually, we're going to have a Bitcoin ETF. Eventually, we're going to have a more kind of diversified ETF that gets you exposure to Bitcoin, let's say Ether, and then, a whole host of other crypto assets. And so long story short, I think that's exactly where this market is heading. Similar to traditional markets, you'll be able to get exposure through an ETF or a mutual fund. And the kind of key here for, again, S&P, Dow Jones, you think about the S&P 500, Dow Jones Industrial Average, those benchmarks are incredibly lucrative for these data providers and these index providers. And I think that's the position in which S&P is really trying to kind of position themselves for.
Yeah, and what about fees, Kevin? Because when you index, obviously there's an opportunity to lower your fees longer term. You don't necessarily have the active management. Does this have an impact at all by creating an index on maybe leveling the playing field when it comes to an ether, a cryptocurrency like Bitcoin, or some of the the up to 500 as they said in their press release? Does this have a way of really leveling that playing field so that you have some level of parity between all the cryptos?
Yeah, I think what's going to be really interesting, and to be honest, I don't have an answer to this yet, and it's something that we're going to be digging into as we get more detail, is the idea of fees. I think, to your point, is a very good one. You would expect kind of fee compression, a more, let's call it, efficient way for people to get exposure to this space. But there are a lot of nuances to trading and even holding, crypto and digital assets, especially ones like Ether or Bitcoin. And when you talk about things we've talked about on this program before, like on-chain transactions and fees, and actually paying, miners or validators to update the blockchains in which these assets trade on, I think it's going to be really interesting to see how there's different kind of tiers of fees, because they're going to need to incorporate kind of rebalancing and the transaction fees and settlement fees that they'll be charged in order to ensure that those transactions and those reallocations actually hold up and are maintained on chain. So again, don't have an answer to exactly what that fee profile is going to look like, but it should by and large become, to your point, a more efficient way for people to get exposure to this space.
And when you talk about efficiency, last question here for this segment. I mean, we've talked off and on about institutional investors. We talked about it here on the program, but also on the podcast. You might see chief investment officers who maybe they may not have a crypto or digital asset team, but maybe willing to gain exposure in their portfolio, whether it's an endowment, a foundation, a family office, for example, or a pension, through an indexed version to give them broader exposure. Maybe they don't get some of the high points of buying a Bitcoin or an Ether or a Ripple denomination of currency, but they get the full broad exposure. Maybe that gives them a little bit of a safety spot.
Yeah, no, certainly. I think, again, and some of these especially the more conservative institutions, I think they're a little ways off still in terms of, even getting an allocation to, let's call it, Bitcoin. But no, long term, I absolutely see it, moving more towards that direction. And again, I almost draw parallels to some of the more kind of esoteric assets, or were once considered to be kind of fringe assets, like emerging market equities, for example, right? And once you had investment vehicles that kind of came in and allowed you, whether it was ETF or mutual funds, for investors to get exposure to, let's call it, more illiquid type assets, which, when you start going down the crypto asset rabbit hole and really start to get outside of the top, 50 or 100, the liquidity profile of some of these certainly isn't anything to write home about. And so I think liquidity will come with more institutions diversity. But it'll be really interesting to see kind of how that grows in the first, let's call it, 12 to 24 months of when these things go live. And then once you have those actual investment vehicles benchmarked to them, it's going to be interesting to see how much that actually moves or sways the market, because again, now you're opening this up to, or unlocking, you could say, an entirely new kind of investor type or investor class that otherwise just simply, not only just from a mandate standpoint, but from a compliance standpoint, couldn't really get exposure to some of these more, we'll call them, esoteric assets previously.
Yeah, you bring up a really good topic, Kevin, or point, which is liquidity, and that is really big for retirement investors, people who are long-term investors. They don't necessarily like the lockups and would want access to these asset classes, but maybe with a little bit more liquidity involved. Kevin, I want to go to a very quick break. When we come back, we'll talk about things that business leaders should know about cryptocurrency and digital assets. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Kevin Kelly of Delphi Digital. Kevin, thanks so much for staying with us this morning.
Yeah, thanks for keeping me around, Jeff.
Absolutely. This is a fascinating topic, fascinating conversation. Let's skip forward now to, let's think about outside the financial services industry, because we've been talking about Bitcoin on this program. You do a lot of research, talk to a lot of institutional investors, but there are things out there that business leaders here in the United States and throughout the globe need to be aware of related to digital assets and crypto. What are some of them?
Yeah, I think there's a couple of things you can hit on here. I mean, one that's more, let's call it short term, is all the things that are happening around the corporate treasuries, right? You've seen announcements recently from companies like Square, which I would say is a bit more expected, but companies like MicroStrategy, right, which has kind of become the golden child of corporate treasurers investing in Bitcoin and actually diversifying some of their cash balance into Bitcoin. I think that's actually set the stage for, more, not only just large companies. You think about your large caps in the S&P, for example, but a lot of corporate treasurers around for major companies and firms. Now I think Bitcoin has to become at least part of the conversation, right? And it's not necessarily saying that every corporate treasurer has to come out and say, yes, we need to have a 1 to 5% allocation of Bitcoin, but it becomes part of the tool in the toolkit, right, for these corporate treasurers, which just by being part of the conversation, I think adds, again, more credibility and credence to the idea of having Bitcoin as a potential kind of reserve treasury asset for some of these companies. Longer term, though, if you kind of flip that on its head and think about just the kind of business models that can be created with crypto and digital assets, to be honest, that's long term. One of the things that I'm really excited about is just seeing these new kind of digitally native businesses arise, trying to bootstrap early users, early adoption, and create, incentives with these, native tokens to basically do essentially that, right? If you're launching a new kind of subscription product or you're launching a new digital product, you want to bring users, you want people to start engaging with your product immediately. If you issue some type of native token, that longer term, the expectation is that comes with governance rights, or it eventually can allow you to vote on very important proposals for whatever digital asset it is that you're holding, or the protocol underneath that that's powering it. That becomes really interesting because, again, now you're starting to kind of vote with your money, but also vote with your time and your attention. And I think this idea of the passion and the attention economy, which we've seen an explosion in growth of, especially, here within the last 9 to 10 months with everyone kind of locked indoors. I think that trend of the passion attention economy is certainly going to be something where, digital assets can start to play an even more key role.
You mentioned cash management, and this really applies to any business, right? I mean, you've got manufacturing, you've got other types of businesses that need to have a cash allocation to pay their regular expenses, maybe do their payroll, other things. I mean, this really opens the door for banking institutions. And I know that the larger banks, the JP Morgans, the Bank of Americas, the Wells Fargos, they are exploring relationships. If they don't already have a crypto or digital asset, they are exploring relationships to bring that in. I mean, this is, as you said, this is really an opportunity to transform American and also global business, not only 1 year, but 5, 10, 20, 30 years down the line.
Yeah, and I think it's going to be really interesting to see how this plays out because, for example, even had MicroStrategy come out this week and talk about or announce, I should say, how they're going to be issuing, I believe it was about 400 million in convertible notes to be able to basically essentially put that into Bitcoin, right? Is that because Bitcoin has passed as one of their kind of treasury assets. And so what I think is going to be really interesting is what you've seen with MicroStrategy is ever since their first announcement, which was earlier this year, their stock has absolutely taken off, and in part because Bitcoin's done incredibly well, but also in part because of the anticipation of longer term what the assets are going to be worth that are sitting on their balance sheet. And if Bitcoin becomes a larger portion of that, obviously it's a bit of almost a play on Bitcoin as well, right? People have joked that MicroStrategy is almost becoming the Bitcoin ETF that everybody wants, right? That the SEC just hasn't approved yet. And so what I think is interesting is, we'll call it short to medium term, Bitcoin, obviously, as we've talked about, is a much more volatile asset. The drawdowns, you can expect, 20, 30% drawdowns on a relatively regular basis because, again, it is so volatile. It's such a nascent asset. But that volatility also works to the upside, right? So a company that's maybe potentially struggling, but invest, let's say 1, 2, maybe even 5% of their cash balance into something like Bitcoin. If Bitcoin really takes off and rips, well, now your opportunity for capital investment and the opportunity for putting that cash to work, the decisions you're able to make, maybe you're able to bring on more people, you're able to expand your business. Again, these are all hypothetical situations, but I think with a volatile treasury asset, become really interesting to talk about because, again, it's a bet on Bitcoin, but it's also a bet on what that capital can be put towards longer term if and when Bitcoin does continue its next leg higher.
And regulation typically lags industry, right? I mean, it just has to. I mean, regulation is there to, I wouldn't say slow up, but it evolves as an industry evolves. Where are we with you? We talked about banking and the changes around banking and cash management. Where would you say, is there a focus for banking regulators, for SEC, for the Congress? I know they've been talking about crypto and digital assets. Are they any further along in terms of new legislation or regulation to kind of put maybe some additional guardrails to protect investors and or just shareholders of these products?
Yeah, so you've got one really kind of interesting development recently. A few members of Congress have put forward was basically a Stables Act, and what it essentially was saying was trying to put some regulation around these stablecoin issuers or institutions that are interacting or conducting stablecoin activity, right? So you think of we've talked about in this program, your USDCs of the world, some of these kind of one-for-one reserved fiat-backed US dollar stablecoins. Some of those have been issued by companies like Gemini, some very prominent names within this space, but regardless, there's a bit more regulation or I guess scrutiny around how those are being created. And I think in part, longer term, what regulators and legislators are worried about is potentially creating almost like this global euro dollar market within the crypto world that right now it's extremely small, especially relative to the size of the euro dollar market today as it exists. We'll call it in the traditional world, but in this parallel financial system, the idea that you can start to create and use these digital dollars as leverage in different ways that are almost beyond, at least right now, what regulators can see because they don't necessarily have the technical infrastructure to be able to look through and understand what's going on within the blockchain world. I certainly expect that to get ramped up as well as you start to see more kind of financial surveillance going on. But long story short, I do think that we are coming to a bit of a head here where regulators are no longer able to ignore the impact that not only stablecoins, but also things like Bitcoin are having on not only, traditional markets, but just the general investor perception, right? It's oftentimes you find that as people kind of start to fall down the Bitcoin and crypto rabbit hole, their perception around things like central banks, fiat currencies, it really starts to transform, right? And not to take this to an extreme, but if you think about where wealth inequality is today, and then this idea of kind of, revolution tends to spark when you get towards levels of polarization that we're sitting at currently. I think, regulators are trying to wake up and worry a little bit about what the long-term ramifications of this could be, because they certainly, at least from our opinion, we expect them to be, pretty significant.
Yeah, that's good. Certainly interesting to see. It's a fascinating topic, and we haven't even touched on the actual blockchain technology and where that can be applied. I mean, we have in previous interviews. Kevin, always a pleasure chatting with you. Thank you so much for stopping by the program this morning, and we look forward to having you back on again very soon.
Absolutely. Thanks for having me, Jeff.
Thanks, Kevin. Great to see you, and thanks for sharing your perspective. And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, so much more, check out our daily newsletter, The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.